We are staring at a geopolitical powder keg and a technical breakout most traders will completely misread. Right now, Brent Crude sits at $107.81 having smashed straight through the $107.50 resistance with effortless momentum. But here lies the classic trap. This exact breakout zone is where retail traders pile in blindly, while smart money begins fading the surge. There is one critical danger zone and one hidden opportunity in today's market. I'll break down both clearly. Stay until the end. I'm sharing 3 exact entry and exit levels you can deploy immediately, including a short setup with game-changing risk-reward for your trading week. Market instant verdict: the session bias leans breakout trending, yet the 60-minute chart is firmly in a fade zone. Higher timeframes paint a clear bullish structure. Daily and 5-hour charts remain aligned to the long side. That said, the speed of this spike has pushed intraday oscillators deep into overbought territory, making a near-term pullback highly likely before the next leg higher. Your key invalidation level to watch: $107.50**. Mark this price down if we break and close below $107.50 on the 4-hour chart today. The entire bullish structure collapses, and this breakout becomes a textbook bull trap. This level is your session anchor. Every move revolves around it. Multi-timeframe technical deep dive: let's analyze charts from weekly down to 60-minute, treating moving averages as structural walls and magnetic support zones. Weekly timeframe: Brent has built a solid bullish staircase since the low $90s.20 week MA, $103.40 60-week MA, $98.80200 week MA, flat at $92.00. Price trades comfortably above all three. A full-blown bull market on the highest time frame. Weekly MACD remains positive and accelerating, with no bearish divergence in sight. Every dip toward these moving averages will see aggressive institutional buying. The major weekly resistance zone sits between $109 to $112, a historic supply zone from multi-year highs where heavy selling pressure will emerge. Daily chart bullish momentum is even more pronounced here. 20-day MA, $105.70. Rising sharply. 60-day MA, $99.20200 MA, $94.10. Price trades well above the 200-day MA, the institutional trendline in the sand. The daily MACD histogram still prints higher highs with no bearish divergence, though momentum is starting to flatten, signaling a maturing trend, not an immediate reversal. We are nearing a potential consolidation phase ahead of the next impulse move. Key daily structural supports: $101.16 and $99.51. A daily close below $99.51 would break the sequence of higher lows and crack the entire bullish thesis. Until then, follow the trend with precise entries. 4-hour chart: this is where the immediate breakout plays out. 20 period MA, $106.20, dynamic support, 60 period MA, $103.80200 period MA, $100.00. Price is stretched far above the 20 period MA following the geopolitical news spike. The red flag here, 4-hour MACD histogram, is declining, even as price makes higher highs. Early negative divergence. This does not reverse the trend, but it signals fading momentum. A pullback toward the 20 period MA near $106.20 is highly probable before another leg up. This is the core zone for all actionable trade setups. 60-minute chart: the short-term picture is overheated. Price hugs the upper Bollinger Band. 20 period MA, $107.30, immediate trend proxy. 60 period MA, $105.90. Air 200 period MA, $103.50. A 1-hour MACD is deep overbought with clear histogram contraction. This is the danger zone for breakout chasers. Price almost always corrects back to the 20 period MA before resuming its trend. Do not chase highs here. Wait for a retest of $107.30 or the former breakout level at $107.50. That's where high-probability sniper entries form. Cross-asset correlation: signal oil never trades in isolation, and gold is sending the exact same fear-driven signal. Gold surged sharply in the past 24 hours, not purely from inflation bets. Real yields actually move higher. but from pure geopolitical safe haven demand. When gold and oil rally simultaneously without a dramatic USD surge, the market is pricing a major oil supply disruption premium, not just a standard reflation trade. Brent and gold safe haven correlation continues tightening. Any fresh tense headlines from the Strait of Hormuz will push both assets sharply higher. Conversely, de-escalation news triggering a gold drop will pull Brent down instantly. Watch gold's key resistance at $1,980. A strong rejection here will pause the fear bid and trigger the oil pullback we anticipate. Fundamental catalyst breakdown. The dominant catalyst over the past 24 hours is clear. Trump confirmed no rushed policy shifts on Iran. This locks in strict sanctions, keeps Iranian barrels offline, and freezes diplomatic negotiations for the quarter ahead. At the same time, the UK is deploying assets to bolster security missions in the Strait of Hormuz, an escalation of military posture, not de-escalation. The market prices this as elevated risk of a supply choke point. Over 20% of global oil shipments transit the strait. Even a minor incident triggers immediate price shocks. These dual headlines have added a $3.4 geopolitical premium to Brent in a single session. This is not OPEC plus production manipulation, this is raw security risk. The 1 to 2 week directional bias remains bullish, with targets at $109 then $112. This thesis is only invalidated by a confirmed safe passage agreement in the Hormuz Strait. A surprise Iran nuclear deal restoring 1 million barrels per day to markets. Aggressive Fed hawkishness triggering a sharp USD rally. Secondary catalyst, 3 exact trade setups, entry a stop a target plus risk reward. I'm sharing 3 fully actionable strategies. Conservative, standard, and aggressive. With exact price levels, no vague market commentary. Strategy 1. The sniper, conservative high probability. Trigger, pullback to $107.50 former breakout support confirmation. 15 minutes bullish engulfing close above $107.60, or clean bounce off the 15 minutes 20 period MAR entry. $107.60 stop loss. $107.10, 50 pip risk, target 1. $109, 140 pips, RR1:3, target 2. $112, RR1:8 plus. Rule, move stop to break even once target 1 hits invalidation. 4 hour close below $107.30. Cancel pending orders immediately. Strategy 2. The active trader, momentum continuation, setup. Enter on a sustained breakout above intraday highs after minor consolidation entry. Buy stop at $108.20, above. Asian session resistance, stop loss. $107.40, 80 pip risk, below key $107.50 level, target 1. $109.50, 130 pips, RR1:1.6, target 2. $111, 280 pips, RR1:3.5, trailing rule. Trail stop to $109.10 once target 1 hits invalidation. Failure to make new highs within next 2 4-hour candles. Bearish RSI divergence on 1-hour chart. Drop your predicted Brent high-low range for tomorrow in the comments. I'm reading every entry to gauge market bias. Strategy 3. The Aggressor, countertrend fade, high. Risk, setup. Mean reversion short at major weekly resistance entry. Limit short at $109.00 stop loss. Tight $109.30, 30 pip risk, confirmation. 15 minutes long rejection wick closing back below $108.80 target 1. $108.20, 30 pips, RR1:1, target 2. $107.60, 120 pips, RR1:4, critical rule. Exit instantly on 15-minute close above $109.30 warning. Only for experienced mean reversion traders. Use half your normal position size. Counter trend trades demand strict discipline. Risk management rules never risk more than 1 to 2% capital per trade. Avoid holding positions through high-impact news. API inventory data and sudden Iranian Hormuz headlines can trigger violent whipsaws. Hard stop losses are non-negotiable. Define your invalidation level before entering any trade. Letting geopolitical spikes run through your stop is gambling, not trading. Closing key level and next session focus the single most important level for tomorrow. $107.50. This is the breakout floor. If it holds, $109 and $112 remain clear targets, and the active trader setup is your primary playbook. If it breaks, the bull trap activates, and we will retest $106.20 and potentially the $105 zone. Tomorrow's key catalysts: weekly U.S. petroleum inventory data, and crucially, any fresh headlines from the Hormuz naval mission. Direct contact between UK and Iranian vessels will trigger an explosive instant spike. Set your price levels in advance if you want my full gold breakdown covering its $1980 resistance and yield divergence setup. The full video is live on the end screen. Drop a like if this analysis gave you a clear trading plan, subscribe and hit the notification bell for daily coverage of Brent, WTI, gold, and all cross-asset market moves. I'll see you in the next video.